Welcome to Module 2 of the Treating Customers Fairly course. In Module 1, we built the foundation. We explored what TCF means, why it matters for South Africa's financial sector, and the 6 outcomes that regulators and customers expect us to deliver on. We saw that fairness isn't just about compliance with the law, but about creating trust, transparency, and accountability in every interaction. Now we're moving from theory into practice. This module is about the everyday actions that bring fairness to life here at ECIC. Think of it this way. In Module 1, we learned the rules of the game. In Module 2, we step onto the field of play. We'll explore what fairness looks like when you're actually working with a customer, processing a claim, managing data, or even handling a complaint. We'll break down practical examples, common risks, and the tools ECIC provides to make sure every employee can apply TCF in their role. By the end of this module, you'll understand that TCF is not something abstract or theoretical. It's lived out in everyday decisions and actions, whether you are advising clients, processing documents, or setting policies. Each of us has the power to either strengthen or weaken fairness through the choices we make. This module is about making sure that in every situation, fairness isn't just a principle on paper, it's a practice that customers and stakeholders can see, feel, and trust. The purpose of this module is simple but powerful: to equip you with practical tools and examples to apply treating customers fairly in your daily work at ECIC. We don't want TCF to remain just a policy statement or something buried in compliance manuals. We want it to live and breathe in every action you take, every decision you make, and every customer interaction you're part of. That means whether you're selling a policy, you're making sure the customer understands the product and that it fits their real needs. Handling a claim, you're ensuring the process is efficient, transparent, and free of unnecessary delays. Responding to a complaint, you're treating it as an opportunity to build trust, not as an inconvenience. This module will also help you understand your personal responsibilities under TCF. It's not just for compliance officers or managers. Every employee has a role to play. You'll learn how to spot conduct risks that might harm customers, how to use E6 reporting and complaints channels properly, and how to avoid common pitfalls that could undermine fairness. Most importantly, you'll see how TCF is about more than compliance. It's about culture. At ECIC, fairness should not feel like a box we tick to satisfy the FSCA. It should feel like a value we live every day. Customers should be able to sense fairness in the way we explain terms, in how quickly we respond to queries, and in how we handle their most sensitive issues. When fairness becomes part of our culture, 3 things happen. 1. Customers trust us more because they see that we act in their best interests. 2. Government and regulators trust us more because they see that we take accountability seriously. We trust each other more as colleagues because fairness isn't just for customers, it shapes how we work internally too. So, the purpose of this module is to take fairness out of the policy document and put it firmly into your daily actions. By the end, you'll be confident not just in what TCF means, but in how you can practice it every day in your role here at ECIC. Learning outcomes. By the end of this module, you will be able to put treating customers fairly into action in practical ways here at ECIC. Let's break this down. First, you'll be able to apply the 6 TCF outcomes in real ECIC scenarios. In Module 1, we learned what the outcomes are: culture of fairness, products fit for purpose, clear information, suitable advice, products performing as promised, and no unreasonable barriers. Now you'll learn how to live them. For example, if you're helping process a claim, you'll know what fairness looks like in that exact situation, not just in theory. Second, you'll learn to identify and report risks that could undermine fairness. Risks aren't always dramatic. Sometimes they're small things like unclear wording in a contract or delays in processing data. If left unchecked, these small things can damage customer trust. By spotting and raising these issues early, you help protect both ECIC and the customer. Third, you'll know how to use ECIC's complaints management and reporting channels effectively. Complaints aren't failures, they're feedback. You'll understand the proper processes, timelines, and escalation points so that complaints are handled fairly, transparently, and in line with regulations. That way, customers see ECIC not as an obstacle, but as a partner willing to listen and improve. Fourth, you'll be able to demonstrate fairness when handling customer data, communication, and decisions. This goes beyond compliance with POPIA. It's about respecting customers enough to keep their information secure, using plain language when explaining policies, and making decisions that are transparent and accountable. And here's an important point. These aren't just skills for staff who deal directly with customers. They apply equally to back office teams, finance, IT, HR, and leadership. Why? Because fairness runs through every part of our organization. An IT specialist who secures data or a finance officer who ensures transparent reporting contributes just as much to fairness as a frontline staff member speaking with a client. The takeaway is simple. Fairness is everybody's responsibility. By the end of this module, you'll not only understand what TCF requires, but you'll also know how to make fairness visible in your own role every day. Embedding TCF in daily work. So, how do we actually embed treating customers fairly into the way we work every single day? It starts with recognizing that fairness is not something that happens only when a customer signs a contract or makes a claim. Fairness applies at every single touchpoint of the customer journey, from the very first inquiry, through policy wording, claims processing, complaints handling, and even after the relationship ends. Let's look at what this means for different roles. Frontline employees. If you deal directly with customers, fairness means making sure they understand exactly what they're buying. It's about answering their questions honestly, explaining risks clearly, and never overselling. It also means escalating issues quickly when something doesn't look right, instead of ignoring them. For example, if a customer seems confused about an exclusion in their policy, fairness means pausing to explain in plain language, not rushing through to close the deal. Back office teams. Even if you don't deal with customers directly, fairness still depends on you. Back office staff ensure that processes run smoothly, data is accurate, and communication flows properly. If customer information is entered incorrectly or updates aren't passed on in time, fairness is compromised, even if the frontline staff have done everything right. For example, a delayed data update might mean a customer doesn't receive an important notification. That small error could cause major frustration. Managers and leaders. For leaders, embedding TCF means setting the tone for the whole organization. If performance measures focus only on financial results, staff may feel pressured to push products or cut corners at the expense of fairness. But if leaders also measure customer satisfaction, complaint resolution, and ethical behavior, then the organization rewards fairness as much as revenue. Managers also play a critical role in how complaints are handled. A fair leader treats complaints as valuable feedback and opportunities to improve systems, not as irritations to be dismissed. Here's a practical example. Imagine a customer applies for a new ECIC policy. The underwriting team must check the risk profile. That's normal. But fairness also means checking whether the terms of the policy are transparent and appropriate for the customer's actual circumstances. If the terms are overly complex or unfairly weighted in ECIC's favor, then fairness has not been achieved, even if the risk is acceptable. Another example, when complaints come in, fairness requires that managers look at them as opportunities to strengthen customer trust. Brushing complaints aside sends the message that ECI doesn't care, which undermines fairness and credibility. The bottom line is this: embedding TCF is not a one-off task. It's a mindset, a habit, and a culture. Whether you are in customer service, IT, finance, or management, fairness is something you practice daily, in every action, in every decision. Fair customer communication. Clear communication is one of the strongest signals of fairness. In fact, for many customers, the way we communicate says more about ECIC's values than any marketing brochure or legal contract ever could. At ECIC, fair communication means three key things. 1. Plain language in contracts and policies. We write contracts and policies in plain language, not in heavy legal jargon. If customers need a lawyer to interpret their cover, that's not fairness, that's confusion. Instead, we aim for simple, clear, and transparent wording. Customers should be able to read their policy and immediately understand what is included, what is excluded, and what they can expect in the event of a claim. 2. highlighting risks and exclusions upfront. Fairness means we do not hide critical information in fine print or footnotes. Exclusions, limitations, and risks should be made clear from the start, ideally explained face-to-face or in a simple summary sheet. For example, if perishable goods are not covered under certain conditions, that must be made obvious before the policy is signed, not discovered when the customer tries to claim. 3. Timely and consistent updates. Communication doesn't end at the signing of the contract. Customers need to hear from us throughout important processes. That includes regular updates during claims assessments, policy renewals, or even changes in regulation that may affect their cover. Silence is not acceptable. When customers don't hear from us, they feel ignored, anxious, or even misled. But when we provide clear, timely updates, they feel respected and reassured, even if the process isn't complete yet. Let's put this into perspective with a simple example. Imagine you are a small business owner exporting fruit. Which would you prefer? A 20-page policy filled with dense legal language where you're unsure what's covered, or a clear one-page summary that outlines the key risks, exclusions, and what you can rely on ECIC for? The fair answer is obvious. Clarity beats confusion every time. And the same applies during claims. A customer who hears nothing for weeks after filing a claim feels abandoned. But a short email, a phone call, or even an SMS that says, "We are still reviewing your documents. Here's the next step," can build confidence and trust. Customers don't always demand instant answers, but they always expect honest communication. At ECIC, fair communication is not just a courtesy, it's a responsibility. Every word we write, every email we send, and every call we make is an opportunity to show our customers that we are a partner they can trust. Handling complaints and disputes. Complaints are one of the clearest tests of whether fairness is real or just a slogan. It's easy to say we put customers first when everything is going smoothly. But when something goes wrong, a delayed claim, a disputed exclusion, or a misunderstanding, that's when customers really measure whether ECIC lives up to treating customers fairly. Under TCF, customers should not face barriers when raising complaints. At ECIC, this commitment means 3 practical things. 1. Multiple accessible channels. Customers must be able to reach us through whichever method suits them best: phone, email, or online. For some, a quick call feels easiest. For others, logging a complaint through our website may be more convenient. Fairness is about giving them options, not making them jump through hoops. 2. Timely acknowledgments and updates. Acknowledging a complaint quickly is critical. Silence sends the message that their concern doesn't matter. By confirming receipt, assigning a reference number, and providing a named contact, we show that the complaint is taken seriously. Just as importantly, we must provide regular updates on progress, so the customer never feels ignored. 3. Clear escalation paths. If a customer isn't satisfied with the first response, they must know where to turn next. That might mean escalation to a supervisor, the complaints department, or eventually the ombud. The process must be clear, transparent, and easy to navigate. Hidden rules or endless back and forth destroy trust. Let's look at a simple example. Imagine a customer emails us with a complaint about a delayed claim payout. If their email is ignored, or worse, bounced from one department to another, trust is instantly destroyed. That customer won't just feel frustrated, they'll feel invisible. But now imagine another scenario. The same complaint is logged immediately in ECIC system. The customer gets an acknowledgement within 24 to 48 hours, a case number, and a clear outline of what will happen next. They also receive regular progress updates, even if the final resolution takes time. In this case, the customer feels heard, respected, and assured that their issue is being handled fairly. This is the difference TCF makes. Complaints are not failures, they are feedback. Each one gives us valuable insight into where our processes may need improvement. In fact, some of the best reforms in financial services have come from listening to customer complaints and using them to drive change. At ECIC, every complaint is an opportunity to strengthen our systems and rebuild trust. By responding quickly, updating consistently, and providing clear escalation, we demonstrate that fairness isn't just part of our policies. It's part of how we do business every day. Data protection and fair use of information. Fairness is not only about the products and services we provide, It's also about how we handle customer information. When clients engage with ECIC, they trust us with some of their most sensitive data: financial records, export contracts, company details, even personal information about directors or staff. Protecting this information is just as important as paying a claim on time. In South Africa, this responsibility is safeguarded by POPIA, the Protection of Personal Information Act. POPIA sets strict rules for how organizations like ECIC must collect, use, and safeguard customer data. But beyond compliance, handling information responsibly is a matter of fairness and respect. At ECIC, this means 3 clear commitments. 1. Collecting only the data we need. We don't request unnecessary information from customers. If we only need their export contract and financial records to underwrite a policy, that's all we should ask for. Asking for extra details just in case is unfair, intrusive, and can increase risks if data is not needed. 2. Using information only for the agreed purpose. Data collected for one reason cannot be used for another without consent. For example, if a customer shares bank statements for an insurance application, we cannot later use that information for marketing purposes or pass it on to unrelated departments. The principle is simple: no hidden uses, no surprises. 3. Keeping information safe and confidential. Customers have the right to expect their data is secure. That means storing files safely, using password-protected systems, and ensuring that only authorized staff have access. It also means being careful in our daily habits, not leaving sensitive files on desks, not emailing documents to the wrong address, and not discussing confidential details outside of work. Let's look at an example. Suppose a customer provides financial details to apply for political risk insurance. If those details are later found circulating in a department that has nothing to do with underwriting, that would be a serious breach of trust and a violation of POPIA. On the other hand, if those details are securely stored, used strictly for underwriting, and destroyed when no longer needed, the customer feels safe and respected. Why does this matter so much? Because information is power. When customers give us their data, they are giving us power over something personal and valuable. If we misuse it, even unintentionally, we break trust. And once trust is broken, it's very difficult to win back. Respecting personal data is not only a legal requirement under POPIA, it's a fairness issue. Customers have the right to know that their information is safe with us, that we won't misuse it, and that we'll protect it as carefully as if it were our own. At ECIC, this isn't optional. Data protection is part of how we prove in practice that fairness runs through everything we do. Case studies and scenarios. Now that we've covered the principles, let's make this practical with some real-world style scenarios. These examples will show how fairness or unfairness plays out in everyday interactions at ECIC. Scenario 1. Misaligned advice. A client exporting into a high-risk country, let's say a politically unstable market, is offered the exact same policy as a client exporting into a stable, low-risk region. On the surface, it may look efficient to provide a standard product, but in reality, this is unfair. Why? Because the risks are different, and so the cover must also be different. The fair approach would be to take the time to understand the client's operating environment, ask probing questions, and tailor the advice. For example, the exporter to a high-risk region may need political risk cover, while the low-risk exporter may only need cover for transport and logistics risks. By listening and adapting, we make sure customers feel understood and protected. Scenario 2. Hidden exclusions. Imagine a fruit exporter buying a policy. Later, when they submit a claim, they discover that perishable goods were excluded from coverage, and that exclusion was buried deep in the fine print. That's not only a compliance issue, it's a fairness issue. The fair approach is to be upfront from the beginning. Use plain language, highlight exclusions in bold, in a summary, or even in a verbal explanation. The principle is simple: no surprises. If the exporter knows the limits up front, they can make an informed decision, even if the cover doesn't fit every need. Transparency builds confidence. Scenario 3. Complaints handling. A customer calls to lodge a complaint about a delayed claim. Instead of getting help, they are transferred from one department to another 3 times and eventually give up without resolution. That's unfair because it creates unnecessary barriers and leaves the customer feeling ignored. The fair approach is to make the process simple, fast, and respectful. One point of contact, clear timelines for updates, and a proper escalation route if the issue is not resolved. Even if the outcome isn't what the customer wanted, the way the complaint is handled can either strengthen or destroy trust. The golden question. In each of these scenarios, the real test is this: would I feel confident, respected, and valued if this happened to me? If the answer is no, then we're not living up to the TCF principles. If the answer is yes, then we're building trust, credibility, and fairness into the way ECC does business. At the end of the day, fairness is about walking in the customer's shoes. If we make decisions with that mindset, we won't just comply with regulations, we'll build a culture of trust that sets ECIC apart. Employee accountability. Fairness is not just ECIC's responsibility as an organization, it's your responsibility as an employee. Every interaction, every decision, and every process you touch is part of the customer journey. So, what does accountability look like in practice? 1. Owning your role in the customer journey. No matter your position, whether you're frontline staff, back office, in finance, IT, legal, or management, you have a direct impact on how customers experience ECIC. If you're in underwriting, accuracy and transparency protect customers from surprises. If you're in claims, timely updates and clear explanations show respect. If you're in finance or compliance, ensuring that rules are followed safeguards trust. Fairness isn't just in sales, it's in every detail, from the speed of a response email to the accuracy of a data entry. Corner of Curry 2. Avoiding conflicts of interest. Fairness also means acting with integrity. Never recommend or approve something because it benefits you at the expense of the customer. For example, pushing a customer toward a product that doesn't fit their needs just to hit a sales target is unfair and damages trust. True accountability means putting the customer first, even if it takes more time or doesn't immediately benefit your personal metrics. 3. Speaking up when you see unfairness. Sometimes unfairness doesn't happen because of bad intentions. It can come from unclear policy wording, flawed processes, or pressure to cut corners. If you see these risks, accountability means raising your hand. Ask questions, challenge processes that don't feel right, suggest improvements. Remember, fairness is not maintained by silence. It's maintained by courage, using ECIC's whistleblowing channels. And finally, accountability includes knowing when to escalate serious issues. ECIC has safe and confidential whistleblowing channels. Using them is not disloyalty. On the contrary, it's an act of loyalty to our values and to the customers we serve. By reporting misconduct, you help protect ECIC's culture of fairness and strengthen our credibility as a trusted state-owned insurer. The bottom line. Accountability is about personal ownership. Every one of us is a guardian of fairness. By owning our roles, acting with integrity, speaking up, and using the right channels, we keep ECIC's promise to treat customers fairly alive and real, not just on paper but in practice. Module summary. Let's wrap up Module 2 with a quick but important reminder. 1. TCF is not just a framework, it's a daily practice. We've seen that treating customers fairly is more than a set of rules from the FSCA. It's something we bring to life every single day. Whether you're speaking to a client, drafting a policy document, processing a claim, or simply updating a record, fairness is the thread that ties everything together. Fairness in every part of the customer journey. Fairness isn't limited to one department. It shows up in multiple ways. Communication, using plain language, being upfront about risks, and keeping customers updated. Product design, making sure policies fit real customer needs, not just ECIC's convenience. Complaints handling, treating complaints as opportunities to improve, not as problems to dismiss. Data protection, handling personal information with confidentiality and respect as required by POPIA. Think of it this way. Each touchpoint with the customer is a test of whether ECIC lives its values. 3. Every employee has a role to play. Fairness is not just the responsibility of customer-facing staff. It belongs to everyone. If you're advising clients, fairness means tailoring recommendations to their actual circumstances. If you're processing claims, Fairness means speed, transparency, and empathy. If you're managing systems or data, fairness means ensuring information is accurate, secure, and reliable. No role is too small because every role contributes to the customer's overall experience of e-kick. 4. Fairness builds trust and credibility. When we apply TCF in practice, we do more than satisfy regulators. We demonstrate to our customers, to government, and to the public that ECIC is an institution they can rely on. This strengthens our reputation, supports South Africa's economy, and proves that state-owned entities can set the standard for ethical, trustworthy service. The bottom line: TCF is not only good compliance, it's good business, good governance, and most importantly, the right thing to do. Every time we treat customers fairly, we're not just meeting a requirement. We're building trust, strengthening our culture, and delivering on ECIC's promise to be a partner that customers can depend on.